My name is Mark Chalmers, and I'm President and CEO of Energy Fuels. Energy Fuels is a unique company built around a long-term history of producing uranium, but also well advanced in adding additional strategy of rare earths. And we are in an excellent position in a very difficult market. And it's really my pleasure to be here today, Matt, to talk to you again.
Good man. Well, look, Mark, as always, a pleasure to talk to you. I called up under the guise of talking about the Q2 24 numbers, but I think the reality is I want to talk a little bit broader than that in terms of what you see going on out there and how companies have got to play it. So why don't we stick with the Q2 numbers first? So what are the headlines that we need to understand?
Well, I think the key ones is we got north of $200 million in the bank, right? And, that's significant liquidity, zero debt. We still have significant inventories of uranium. We did report a net loss of $6 million, mainly because of a number of the deals that we've been working on with things like Base and Astron. But I want to point out, too, Matt, that over the last year and a half, between selling uranium and, we sold the Alta Mesa project, we've had effectively over a year and a half, we've had $100 million of net income. So, that has been a key part of how we're able to maintain our very, very strong balance sheet and move forward, particularly in markets like this. I mean, this is not my first rodeo. And I don't think anybody likes a down market like this. I don't like a down market like this. But over 48 years, that is how we position. We are positioning for the long term to be strong and being able to survive these kind of markets. And, I always position as, you've heard me say it, be aggressive but not reckless.
Right. Okay. So $200 million worth of liquidity is healthy in a market like this. And you did take a bit of stick for raising money over the past 3 years when you did. I guess this is why you did it, right? But let's, if you don't mind, I want to stick on this kind of slightly, I'm going to call it, conservative position, because when others seem to be running off into the distance in terms of their valuations, in terms of their share price, etc., you haven't seen that. So, who's got it right? Who's to say who's got it right? Why do you think this position of yours is the best thing for your shareholders?
Yeah. Well, I mean, I think there's two kind of plays. There's a short game and a long game, and I think there's also momentum plays. Okay, and you've seen that in lithium, graphite, and uranium, and you see that when everything's going in the right direction, you get rewarded for that. And look, historically we've been rewarded as a uranium play as well. And so I think the key thing is, again, we're out there trying to strike the balance and play the long game, and that's what we're focused on. And we are also focused on being world material. And so, look.
What do you mean by that, Mark? World material? What's that mean?
I think world material in this critical mineral space, in the rare earths, uranium in the United States, we're United States material. So, it's really, a delicate balance between with shareholders playing the short game and the long game. But the game that we've been playing, and it's not a game, it's a strategy, is a strategy that is focused around being able to absorb and survive and flourish in a market such as this right now. To be in a position that you've got the balance sheet, the zero debt, you've got building revenue, you've got activities at your mines, you've got zero debt, and you're producing uranium, you're signing contracts. We signed another contract in the quarter. So I mean, it depends on where you want to measure. Are you measuring over a year, or you're measuring over 5 years time? That's the delta.
Well, if I'm an impatient investor, I probably want the shortest time frame possible, and I'll work out how I play that. But if you're building a business, you got a different set of priorities. So do you mind and the way I value a company is its ability to produce cash, right? It's simple, old school. cash. So let's stick with uranium for now. We'll leave vanadium and rare earths for aside for 1 second. So with uranium, so you're producing at the moment. You made some sales in the last quarter. Just remind me the sales numbers there.
Yeah. Well, we just sold 100,000 pounds at 58.90 a pound. We did a spot sell, so we've sold 400,000 pounds the first 6 months. 200,000 under contract at around 76, and then we made 2 spot sales, one at 103 and one at this effectively 86. So the blended price is about $85 a pound. So this is a way that we tend to position ourselves between having long-term contracts for a portion of our uranium and uranium production and being open to the market on the other portions. So we're building up our uranium production. By year end, we'll be at that 1.1 to 1.4 million pounds. Next step is 1.5. Next step is 2 million pounds per year, which is big in the United States. People think that it's not big, but in the United States, 2 million pounds is big, because if you look at like in 2007, 8, 9, 10, whatever, I mean, the uranium production in its entirety in the United States was about 5 million pounds of uranium per year.
Right. Okay. So you're producing, which is great, and your aim is to kind of build up the amount of those pounds up to 2 million or so. You got a signed contract. I note that you signed a sort of 4th term contract there to U.S. utility, presumably, was it?
Correct.
Right. Okay. So it's starting off. It's potentially up to 550,000 ounces. Pounds.
Yeah.
Pounds. So it's quite a chunky one. Is there much term contracting? Are there many RFPs out there at the moment?
Yeah, I mean I think it's really driven on kind of where the market is, and I think as the market softens, people are there's more appetite to go put out more RFPs to see what people will sign up for. And this one, we really like this contract because it's a 2+2. It's a 2-year contract, and it has an option for another 2 years. And the reason we like it is because what we do is we offer that to utilities, because we don't have debt. We don't have to have a 7-8 year commitment, that we can offer up these smaller contracts that are nearer term, and at more favorable prices, because they're nearer term and they're not long term. So it's really attractive. The other thing, Matt, I want to mention on our sales, that if you go back with our uranium sales, we've been ending up with margins of between 50 and 65% on our sales. So our margins have been very, very strong, and that's because of this sort of blended costs that we have between alternate feed, in some of our inventories and other uranium that we produce. So we can blend our costs in a way that others can't, to get very attractive margins, and very attractive margins from the past and going forward.
Tell me this. Obviously, you've just been through a process of negotiating a new term contract there. Is it still a buyer's market, or is there sort of equanimity in terms of those negotiations, those discussions over price? Is it a seller's market yet?
Well, I think it at least in our case, we were able to get a very good result because of what we have and what we offered. Okay, as I said, I mean, I can't ever go into details on this latest contract, but I can say it's very favorable to us, and I think it's favorable for the utility, because we offered a product that others cannot offer. Most people that are restarting their mines or trying to finance mines, they're looking for 6-8 year deals, and they need that because they need that to get their financing. They need it because once they get that monster up and running, they've got to keep feeding that monster. And we have unique flexibility where we have, several mines that can, mine 250,000 pounds, 500 million pounds, and we can kind of build that book up and be flexible to that book. And that's why we get a 2+2 and positions us in a way that gives them U.S. production, U.S. newly mined production, but they don't have to commit looking out 8 years or something. So
Right. Okay. Well, obviously the news came out recently from Kazatomprom was probably not what the market wanted, the uranium investor market wanted to hear, which is that they'll be producing more pounds, not less pounds. I think the reality is that all those pounds will be heading east anyway, so it's kind of irrelevant for sort of Western utilities, etc. But nevertheless, market slightly disappointed by that. What are the other things that kind of concern you, or I guess if you're an investor, view as an opportunity with around supply?
Yeah, I think, I mean, certain this market volatility has been difficult for everybody to stomach. And, I mean, certainly in a down market like this, it's really tough for people to raise money, without getting just annihilated. And again, our opportunity is we've got that $200 million in zero debt and a revenue stream that is building right now. I mean, we actually have uranium showing up at the mill, and we're starting up the mill in about a month's time to go into back into processing these uranium ores that we have substantial stockpiles. But I think the other thing that's out there is, a number of these projects that are restarting and new projects, they have significant technical risk of getting those projects up and running. And it's not easy. Anyone who thinks it's easy, people that say they want to be a uranium producer, sometimes I ask them, why? Because it's hard. The easiest thing is not to produce uranium. It's harder to produce uranium. So, and after 48 years of producing uranium, my hair still got a little color in it, but it is difficult. So I think that what's really the next sort of wave is, who can produce, how much are they producing, what is their cost of producing, and that's a challenge for all of us. It's a challenge for Energy Fuels too, but we've done it for decades. I mean, the White Mesa Mill has been around since 1980, and it survived the test of time because it could produce at times like this, good, bad, indifferent, alternate feed, and survive when most projects went out of business 30 years ago.
Okay. Well, it's an interesting phrase you use. It's easier to not produce uranium. In the sense, a lot of people have been very good at talking about the theory of producing uranium over the past 4 or 5 years that we've been looking into it. And we always kind of thought the rubber would hit the road a lot sooner than it seems to. Seems to be some very good reasons from companies why they shouldn't produce it. Maybe that's the smart thing at the moment. Maybe they're getting valued better by not producing at the moment.
Well,
maybe they've been clever.
What's kind of interesting is, if you look at that 2006, 7, 8, and the price of uranium went up, and all these people now say they're producing. And I've used this analogy before, but WNA, took people's estimates in 2008, and then they looked at them, I think it was in 2012, and like 10%, 9% of what people said actually made it to the market. Now, you had Fukushima in 2011, but a lot of these projects had been advancing, and they said, well, maybe 5 years isn't representative, and they extended it to 6 years, and I think it went up to 20% or something. So if people think that 100% of what everybody's saying they're going to do is going to come on the market, they have a very big surprise coming. I don't know what that percentage is going to be, but I think it's going to be in the lower end rather than in the upper end in terms of what people can actually get to the market.
Well, it's an interesting times. Well, it kind of feels like I've been trying to work out what the incentive price is, and I kind of feel that we're at or beyond, incentive price for lots of people. Maybe I can't come back to that. Maybe they're being smart by holding out for more from utilities, or maybe utilities know more, because it feels like people in the sector here's the thing that slightly worries me about the investment market at the moment. Every expert I've spoken to in the last 4 or 5 years in the game, from the fund managers, etc., their call on the Kazatomprom situation was they were going to make a big announcement about we're producing less pounds for the world's largest producer, then suddenly turn around, and shock everyone and go, oh, we're producing more. It just kind of reminds me how little the investment market know about the industry. And I guess the people in the industry seem to be able to, draw down on a history of experience in the market, in the game, and know that there will be surprises, and they understand how the supply could or could not flow it into the marketplace. And that's a kind of wake-up call for me after Kazatomprom announced that. It made me really second guess my investing strategy as to where I'd put my capital. So like I think this conversation is quite useful to me from that point of view. Let's move on from uranium, because you're more than a one-trick pony. The de-risking component, which I guess has an impact on your bottom line, because investing that you've been doing with base resources, and securing the kind of monazite, etc., and building permits and licensing for all of the above. That are you still comfortable? Are you still sure about this sort of multi-commodity approach of yours?
Yes, absolutely. I'm absolutely certain that to be world significant, you've got to take some risk. But again, aggressive but not reckless. I believe that the base resources fits Energy Fuels profile better than anyone else's because of the nature of that project and the amount of monazite that's in that project. We're moving towards final investment decision at the Astron project in Victoria, and we're doing a lot of that work on that project right now, and we're also advancing Bahia. What's also interesting is that people at Base are starting to help us with both those projects. So we have the expertise. With Base, it isn't just about the Toliara project. It's about a team that has the skill sets to mine heavy mineral sands profitably, a team of heavy mineral sands production combining with us to get an outcome that is extraordinary. That is the way I see the Base acquisition. So we're advancing that. We have discussions on a daily basis with Base. They're excited about it. We're excited about it. And but at the same time, as I said, you just look at us as a uranium play with the $200 million in cash, enterprise value of a little over $500 million, the assets we have in the United States. And I can say that this is the best valued uranium company, I believe, in the world. And after 48 years, I believe I have the right to say that. That's my opinion, but I've done a lot of uranium mining over the years. So no, I'm very excited about where we are we've got our separation plant has been commissioned. It functions. We're advancing phase 2. We're advancing the close of the Base project. It goes out for shareholder vote beginning of September. So it's only about 3.5-4 weeks away. And it's full tilt ahead. But I also want to emphasize to people that this rare earth addition hasn't cost hundreds of millions of dollars. I mean, over the course of 4 years, I think we've spent around $50 million of cash between Bahia and some of these, the modifications we did to the mill, and we still have $200 million in the bank. Okay, we've added to our balance sheet. Not, sure, we've consumed some funds for that, but we've continued to build a stronger balance sheet. So it's a unique story. It's a story that provides some diversification. It's playing the long game, and our goal is to be world material. And we're getting closer by the day. But it's a tough market, and that's why we position ourselves the way we position ourselves, because I've been through a number of tough markets in my career. And if I have any confidence in surviving, after 48 years, I've survived, and I've kept the pedal to the metal around the world with the projects, the opportunities, the companies I've been involved with.
Right. Well, Mark, I think let's kind of wrap it up there. And we could get into the whole uranium market at the moment and uranium pricing, etc. But I think that's been kind of done to death. It kind of feels like sell in May and go away time at the moment for most people across all metals, all equities at the moment. Say you got that money in the bank to move things forward. So look forward to that. Hey, do you want a little surprise? Guess who's going to White Mesa in September?
Sure.
I'll give you a clue. You're looking at him.
You are. You're going to finally
I am.
make it, huh? All
I
right.
am. I'm going with, I think ISO Energy are doing a little trip from Beaver Creek, where I'm going to be. We're going to drive down to Moab, I think, and then take a trip around there. Well, your former mine, and then go to Mesa. Looking forward to that.
All right. Well, that's news to me. So welcome.
I know.
I'll see if I can be down there at that same time. But yeah,
That would be awesome. That would be awesome.
Unique facility. Again, looking at the market, the uranium business is still in as good a position as I've seen it in my entire lifetime. Okay, we're uranium bulls here. We're not out of the uranium business. We're very much in the uranium business. Just look at our balance sheet, look at the enterprise value, look at the assets we have, look at the fact that they're operating right now, look at the margins that we've been getting off of the sales that we've had. And I think we're in an enviable position, for a re-rate as this market settles down a bit, and we continue to build these other pieces of our strategy so people can see that they've been closed and we're able to move forward.